Now to breaking news from the Bank of Canada this morning. The Bank of Canada rate, as expected, has remained unchanged. Joining me now to discuss is Pedro Antunes. He is the chief economist with the Conference Board of Canada. So things were expected in your world to remain steady at 2.25%. Is this decision in line with your expectations, Pedro?
Yeah, I think it was pretty clear that the economic news has been stronger than expected. In fact, Statistics Canada just a few weeks ago revised up their estimates of economic growth for the past two years, 23, 24, and also in 2025, we got a bump up in the third quarter, which really changes the perspective. As you know, the bank is often looking at where the output gap is, and this really goes a long ways to close the output gap in a sense. So there's that. There's the labor market that was really stagnant, but in the last 3 months we created 180,000 jobs, a little over that, and the unemployment rate fell to 6.5%. A very steep drop in the unemployment rate just in the very last month. So both those factors suggested that I think the bank will hold pat. There still may be rate cuts if we see something more dire in terms of the economy going forward, but for now I think they're just going to hold on to some gunpowder if needed.
What do you think we're going to hear next hour from Tiff Macklem, the governor of the Bank of Canada, when he speaks about his reasoning, the council's reasoning behind the decision today to keep things where they are?
Well, I think the bank is comfortable in that the economy is holding, is resilient, as I just mentioned. The bank considers the rate where it's at what is the neutral rate, what they would define as the neutral rate. In other words, they're comfortable in this with the rate as it is because it doesn't add nor take away from economic growth. And so, given the situation, given the fact that the gap has closed significantly, just with those announcements from Statistics Canada, the revisions, I guess, I think that's going to be the message that, the economy is kind of progressing, perhaps even a little bit stronger than they expected. The other piece, of course, is the inflation. And when we look at the top line inflation numbers, they're quite weak. But if you look at core inflation, which excludes some of these, well, for example, the carbon tax reduction that we've seen, and core inflation numbers are still pretty strong. And so I think the bank wants to feel comfortable in a rate that stays where it is.
And my last question then for you this morning, Pedro, and again, we're going to hear from Tiff Macklem at the bottom of next hour, is what are we expecting in 2026? We've got some major things, like CUSMA renegotiations. We've also been able to withstand some of the tariffs, but that could change. So what are you expecting for 2026?
Yeah, we don't have a very positive outlook for the economy. Again, because of these, the hit to our trade, our exports, they're down significantly. I know that we hear that most of our products are going across the border under CUSMA compliance, and that's good news. But there's a number of sectors that have been very hard hit, and those are showing up in the bottom line. The other piece is the uncertainty. I mean, will we see a renegotiated CUSMA? Will we see some sort of deal where investors can feel more confident that they're going to have access to the U.S. consumer and start investing again in Canada? The last budget was all about building Canada, getting private investment to do some work here in this country, and I think with the uncertainty that still sits, it's going to be a challenge to get that investment going next year.
Pedro, great to see you this morning. Pedro Antunes is the chief economist with the Conference Board of Canada. Again, our breaking news this